Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. This week, my guest is Frederick Obodozie. I don't know if I pronounced that right. I think I did okay.
You did well, no worries.
Well, Frederick, if you want to give everybody a bit of an intro to yourself, a little bit about who you are, and then we'll have a chat.
Okay. So my name is Frederick, a new Canadian, moved to Canada in 2021. Started real estate investing in Canada in 2020, actually. And then did some investments here in Canada. And then in 2021, expanded into the US. I continued to do my real estate investing here in Canada. And then 2021, like I said, I expanded into the US. And I've done a couple of transactions so far in the US. As at today, we have real estate investment interest in three provinces here in Canada, New Brunswick, Saskatchewan, and Ontario. And we also have US, real estate investing interests in 4 states in the US, Texas, Michigan, Ohio, and New York. And, that's pretty much a summary of my real estate investing journey so far.
Awesome. No, there is a lot to go on here. Like we go a lot of different directions. So I don't know if somebody caught this whenever I heard you just doing your intro, and you said you moved to Canada in 2021. You started investing in 2020 in Canada. So you were investing in Canadian real estate before you got here?
Before I even got here, yes. I already had the opportunity to move to Canada. So before I actually moved, I did a lot of research.
Yeah.
About the Canadian economy, and I found out that real estate was one of the driving forces of the Canadian economy. So just to give a bit of a background before I actually moved to Canada, I'm a lawyer by training, first of all.
Okay.
And I also worked in investment banking for about 15 years. So when I had the opportunity of moving to Canada and I did my research and found out real estate was actually one of the driving forces of the economy in Canada, I started doing a lot of research, and then it was a no-brainer. Even before I moved, I started investing. I already started doing investing here in Canada before I moved. So I already had, I had some real estate interest in Canada before I actually got here. All right. Okay. Like my primary residence I live in Oakville, in Ontario. I actually started with my primary residence, and then from there moved, to other cities. In Windsor, then up north, North Bay, Sudbury, Peterborough, before moving into other provinces in Canada. And then after then, I knew the US was just next door neighbor. So, and I already started seeing the lower prices, but then prices were beginning to go up. I did some further research and found out that, okay, look, we're just next door neighbors to the US and the price is actually better. And as a business person, your return on your investment, you look at your return, right? Yeah. And I did some research here and there, and I found out that the American opportunities were actually within reach. And so that's how I dived into the US market as well.
So before we get into the US stuff, one question about the Canadian stuff. Were you able to get mortgages in Canada like before you got here, or did you actually have to buy in cash and then figure it out, or how did that work?
Yes, I was able to get mortgages here in Canada because I was already, like I said, I was already in transit pretty much because I was already a permanent resident of Canada. So I already had that option of getting a mortgage. The only difference was that they wanted to put a lot more money as down payment, as deposit, and that was fine. So I was able to get a mortgage even before I moved.
Okay, I was curious. I'm like, it's always interesting because I'm like, whenever say I was to invest in the U.S. compared to American investing in the U.S., typically an American will get more leverage, and Canadian, because we don't live there, get a little bit less.
Correct.
And so I was just like, I'm assuming it probably goes the same sort of way when investing in Canada, and it does.
Yeah, it does.
So honestly, even from branching out of working in, like, say, even Ontario, or even working out of Oakville, right? Mm-hmm. And starting to invest in other provinces, like you said, New Brunswick and Saskatchewan. Mm-hmm. tell me a little bit about the transition to just working or doing real estate at a distance. Like, what did that look like for you? What challenges did you face?
Yeah. So it was a funny story, to be honest. So Ontario was easier for me because I was going to be based in Ontario. So I had been to Ontario, I had seen a few things myself. But in Saskatchewan, for instance, which was the second province that I invested in, it was a bit tricky and I had to just pretty much bet on my investing instincts. I'd already listened to a lot of podcasts. I had learned a lot about the Canadian real estate market. And from my investment banking background, I also knew that, look, in order to make things work, all you need is boots on the ground on systems, right?
Yeah.
So the first thing I did was to make contact with a realtor in Saskatchewan, close to Regina.
Okay.
So I made contact with the realtor in both provinces, actually, and in pretty much in all my investments out of where I live, right?
Yeah.
First of all, get in touch with a realtor who is who's local and familiar with the terrain.
Yeah.
And then I pretty much give that realtor my buy box. This is what I'm looking for, right? And I'm out of town. I'm out of station. So I want a property that I can easily manage by getting, say, like a property manager or caretaker to manage property and then make sure the property is running and then pretty much give me reports. So I got in touch with a realtor. From the realtor, I got contacts to inspectors, home inspectors. I got contacts to lawyers. I got made contacts with property managers, and pretty much just made it very clear to each and every one of them what I was trying to achieve. And it's actually not that difficult, to be honest, if you make contact with the professionals who have boots on ground, and then make it clear to them what you're trying to achieve, and then run with it, pretty much, right? But one thing I did myself, which I really didn't leave to the realtor or any of those professionals to do for me, was running the numbers. I was running
smart.
all the numbers myself. So even when the realtors were bringing properties to me for assessment, I get all the information I need, the income, the expenses, vacancy rate, and all that stuff. I was running the numbers myself. And to be honest with you, I had instances where the realtors actually threw some properties toward me, and I ran the numbers, and numbers didn't make sense, and I pretty much sent it back. All right. So
their incentive is to sell the property.
Exactly.
Right?
The incentive is to sell the property. So if I have one advice for the viewers, the advice would be, look,
I have more free content. So if you're interested, I created a PDF guide and a video to go along with the PDF guide to complement it. And what the guide is all about is the 5 most common mistakes that Canadians make when investing in the United States. So if you're interested in this free guide, go to CanadianInvestingInTheUSA.com/mistakes. And let's go back to the podcast. And it's free.
I have one advice for the viewers. The advice would be, look, yes, it's easy you can actually do out of state or out of province. It's not that difficult. With systems in place, you can do it. But you do not subcontract your numbers. You have to run your numbers and be familiar with your numbers yourself. That is very key. Very, very key.
I totally agree. Even for a while, I got a VA to go run numbers for me.
Okay.
But every number that I got, it was just to pre-screen the deals.
Okay.
I didn't trust them. And I went and did it, like, if they said, hey, these are the top 5 out of the 40 you sent us, and I'll go, now I'll do the, run the numbers on the top 5 just to cut my timeline down, because
exactly
you got to be responsible for those numbers.
Exactly. You're right. You're very correct.
So you said something just a second ago, whenever you're having the conversations with, your new team, your realtors, your property managers, your home inspectors, your lawyers, that you said you wanted to have a conversation to tell them what you wanted to achieve. What kind of things were in that conversation? What were you trying to achieve, or what with your sort of investing in those markets?
Okay. So first things first, my strategy was buy and hold strategy. And it was for rental income purpose, right? So all the properties that I bought were pretty much going to be rented.
Yeah.
I tried as much as possible to get them below market value. from the outset to make sure I got them below market value. So I already had to.
Which was tricky back in like 2020, 2021.
Yeah, it was exactly. Very tricky. But I still got some good deals, to be honest. Yeah, even with at that time. Yeah, I mean at that time, and even later on, before things went, haywire. So I made it clear to them that I was trying to do. That was my strategy: buy and hold for rental income purposes. I also made it clear to them that look, I wanted a situation where I could also add value to the property. So I had the value added opportunities, so as to also increase the value of the property. But the major objective for me was my return on investment, cash flow, pretty much. I wasn't too bothered. I didn't pay too much attention to appreciation.
Yeah.
Right. Yeah.
That's a tough number. That's
exactly. So I wasn't too keen on that. My major purpose was I wanted something that was going to be cash flow positive. And lest I forget, when I moved to Canada in 2021, I pretty much started running my businesses here, including the property business. Right. So I never got into any 9-to-5 job till today. So cash flow was critical for me because I wanted something that would be coming in on a monthly basis to take care of my my monthly needs, and to also take care of my family. So that was the first thing I always made clear to them, that look, this is for the purpose of making sure I get monies on a cash flow basis, on a monthly basis. And then if at the end of the day, yes, did a few renovations here and there to add value, and the property's values went up, that was more like a cherry on the cake. On the icing on the cake, rather.
No, I agree.
Yeah. So, and they pretty much understood this, and like I said, that then formed the basis of which they presented properties to me to review. And once I ran a few numbers on some of them, on all of them, and I found out that this particular property met my objective, I just pretty much pulled the trigger on it. Yeah. Sometimes it was a bit scary, to be honest, especially having just moved to Canada recently and doing investments out of your base, out of Ontario. And just so the viewers know, I have never been to these provinces before till today. So I've never been to Saskatchewan. I've never been to New Brunswick. I've been to Texas in the US, but I've never been to Ohio, Michigan. Okay, and I've been to New York. So I've been doing a lot of long distance investing for a while now. Across Canada and the US. And it's important to mention that it's not that difficult if you know what you're doing. You have a strategy and you have boots on ground to help you achieve that strategy. It's actually doable.
Love it. What did the first property in the US look like? Which you listed those 4 states. Which one did you go to first? Why'd you pick that state? And what'd you buy?
It was in Texas.
Okay.
First property was in Texas, Lubbock, Texas.
Okay, I'm familiar with that. I was looking at a multifamily there.
Yeah, Lubbock, Texas. And you'll be shocked. I've taken quite some risks, to be honest, Glenn, but at the end of the day, as long as they pay off, and like I always say to people, fortune favors the brave. Fortune favors the brave. Yeah. If you want to make money, if you want to get things done, you have to be ready to pull the trigger. All you need to do as an investor is run your numbers, get all the information, do your due diligence, make sure you have professional boots on the ground, even if you're not there physically. And then if you feel it's a good fit, just pull the trigger. Don't wait. If you wait, if you don't take any action, you're never going to achieve anything. So the first one was in Texas. It was a single family house, Lubbock, Texas. I believe it or not, I got that property off the MLS.
Okay.
Off the MLS. Yeah, I saw it. It was a single family house, 3-bed, 2-bath. It was actually quite renovated. It was pretty much it didn't need so much work to be done on it. And it was a realtor based out of Lubbock that wanted to sell it. And he listed it for $60,000. One of the things that attracted me to it was the fact that there was a seller financing opportunity attached to it.
Oh, was that in the listing?
Yes, it was in the listing. They actually mentioned it in the listing.
That's great.
And it was $60,000. The seller requested for $10,000 deposit, and he was willing to give $54,000 on a seller financing basis for 15 years at 8%.
Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
Right? Yeah, which for me was pretty much a no-brainer. It was a no-brainer. I ran the numbers so that it made sense, and then I just pulled the trigger. So what I did was I went to the bigger. I didn't know any realtor in Lubbock, so I went to the Bigger Pockets forum. I went to because I was already familiar with Bigger Pockets, and I knew that even if I wanted to invest in the city and I didn't know anybody there, that forum was a good forum to go and meet somebody who was familiar with real estate, right? So I went to the Bigger Pockets forum and I went to that city. I zoomed into people from that area, and I got in touch with. I got a contact information for a realtor based in Lubbock, out of Lubbock, Texas, and I just reached out to him and said, "Look, I haven't. I've seen this property in Lubbock, and I already knew that a realtor working for me was at zero cost to me because the seller was pretty much going to pay the realtor, so I knew it was at zero cost to me. Yeah. So I pretty much just went. I reached out to him, told him I wanted to buy the property. He reached out to the seller on my behalf, and the rest, to say, is history. And the rest, to say, is history. At the end of the day, I did my home inspection. There was a problem with the roof, so I negotiated with the seller. I said, look, I have to fix. So I got the quote for the roof. I think it was about $4,000 to change the roof completely. I negotiated with the seller, and the seller, I think the way we were able to sort that out was the seller at first didn't want to do it, but at the end of the day, the seller said, okay, you know what? I would increase the price by $4,000, $64,000, and if you agree to pay $64,000, I will fix the roof before I sell it to you.
Oh,
yeah. So at the end of the day, so we grossed up the amount by $4,000, which was actually the cost of fixing the roof.
Did he fix the roof, or did he hire that company?
He hired a company to fix it.
Ah, okay.
And
so
I made sure
at a better price. Yeah.
I made sure he got a company to fix it.
Yeah.
At the end of the day, it was still a good deal for me, to be honest, Glenn, because even with that, even with gross, the roof was going to be fixed, and so I pretty much took over.
You still have the same deposit?
Yeah, so I've been making the payments on a monthly basis. The deposit was pretty much the same.
Okay.
Pretty much the same. And
then you can finance that roof, which is nice.
Exactly. Well, yeah, exactly.
Kind of. Yeah, it's thrown into the property,
true.
Right?
Exactly. So, and this was in 2021. And I still have the property till today. So this is 3 years going to 4 years now. Like I said, the tenure was 15 years. And to be honest, I've thought about the property value has gone up since then. Yeah. I bought it for $64,000 eventually. The last time I made inquiries about the value, it was somewhere around the $100,000 mark, about $100,000 or a little over $100,000. And right now, I've thought about refinancing it, but for now, I just let it be. For now, it was eventually rented for $800 per month. Yeah. Tenant took it for $800 per month, and the rents were coming in, and it was from the rents. I was also servicing the mortgage, taking care of the bills, and that's pretty much it. It was one of the. So that was my first property in the U.S. It started off via seller financing deal, and that, of course, exposed me, and that experience exposed me to. I had to get experience with that deal. I learned a lot of things about the U.S. market as well. I learned terms. That was when I learned terms like EMDs, title companies, and all that stuff that is peculiar to the U.S. market. That it's not.
It's a little different.
It's a little different. It's a little different. Yeah, So, and that was pretty much it. Quick point. I also learned something about that. One thing I also learned about that deal was the fact that at that time, when I was about to close that deal, I wasn't fiscally present in the U.S. So I had to go to the nearest where I was. I had to go to the nearest U.S. embassy to sign the docs. So Notary Public in the U.S. embassy to sign the documents, notarize everything, and then she just shipped out the documents via DHL to the title company.
Awesome. Yeah. Maybe
Yeah.
I'll mention on this podcast too. If people are looking, I have a freebie at Canadian Investing in the USA.com/notary. And there's 7 different ways you can get stuff notarized in the US. And like, I think 5 of them, you can still be in Canada. So
Great.
anyway, I'll throw that in for people that are listening to this. They'll be like, oh, that'd be great. That's, perfect. Right on point that you brought that up.
Great.
So you started off in Lubbock, Texas, and then you mentioned you went to Michigan, Ohio, New York.
Correct.
One question I always ask, because I'm very deliberate whenever I'm switching markets or whatever. Why not just continue doing Lubbock, Texas? Why switch to other markets?
Great question. So Lubbock, Texas was the market that I actually started first in, and I sort of had this affiliation with that market, right?
Yeah.
To be honest with you, I actually kept looking for other deals in that market. But at that time, I did this deal May 2021. At that time, things started changing. They weren't only changing in Canada.
Yeah.
They actually started changing in the US as well. I mean, it was worse in Canada, but so prices started going up. We weren't seeing so many deals anymore, right? I still kept in touch with my realtor in Lubbock. And, he knew that I made it clear to him that, look, if you come across any deal, let me know. I'm always interested. And between the both of us, we were looking. I was also checking the MLS as well, the bigger pocket forum. I also joined groups on Facebook as well. Certain groups on Facebook, which is a very good resource as well.
Oh yeah,
very good resource as well for this purpose. So, but I think the market started to change a little bit. So most of the deals I was coming across, it was either the prices were too high, the numbers didn't make sense. I wasn't seeing so much. I wasn't seeing so much of the seller financing opportunities I had seen in the first deal. So. And for me, because I wasn't seeing the numbers weren't making sense and I wasn't seeing those opportunities, I just decided to, you know what, maybe I should just look elsewhere and see where I'll see opportunities. And lo and behold, when I did that, and the next market I looked at was Ohio. When I did that, Ohio, as you know, because I know you invest in Ohio as well.
Yeah.
Ohio was the market in Ohio pretty much presented those things I was looking for. The price points, the opportunity for seller financing, creative financing, the return on investments. Like I always say, I always look out for a double-digit investment return, and that was what I was pretty much looking at. So Ohio was the next market that I looked at before I found something. The same way I was looking for in Lubbock, I found something in Ohio, and seller as well, trying to retire and wanted to sell off his 2 duplexes. Wanted to sell off his 2 duplexes. One of them had a roof problem, and he wasn't willing to deal with it anymore. So I, like as usual, got in touch with boots on the ground over there, did my research, did my inspections, got an idea of the cost of fixing the roof. And at the end of the day, I was able to buy those 2 properties for 2 duplexes, meaning 4 units, for somewhere around $100K. Out of that $100K, $50K came through seller financing. $50,000 came through seller financing at 6% for a 10-year period. And like I said, one of them had a roof problem. When I had my contractor pull up quotes to fix the roof, it was just pretty much I think it cost about $6 or $7 grand to fix the roof and fix all the water damage.
Yep.
And so at the end of the day, it was a pretty much good deal, because after the property was fixed, the rents from those 4 units each unit was pretty much generating about $575 per month. But we were able to, as of today, we've been able to push that up to about $800 per month now, right? So right now, those 4 units is grossing over $3,000. And what I paid to the seller, based on our seller financing arrangement, it's pretty much about $500, $550 on a monthly basis. So it's a profitable deal. And so on a cash on cash return on investment basis, it's good. And the value is also appreciated. This deal was done in 2022, January of 2022. So this is about 2 years plus now. And The last time I checked the value was somewhere around the $150 mark, $150,000 mark for each of them, because I'm talking about two duplexes here, right? And so those are the kind of deals that I set out, that I started with looking. I mean, looking at the deal I did in Lubbock and the one that I just described to you in Ohio. Those were the deals I actually started off looking for those kind of properties, because that was where I wanted to start from. Although the strategy is changing now, the strategy has started to change. I'm looking more into multifamily now, right? Okay. I'm looking into more multifamily now, 5 units and above, because I'm trying to scale things faster now, which you can't do with single family and residential multifamily, 2 units to 4 units. And I'm also trying to it's pretty much just scale up things and take things to another level in the U.S. Multifamily investing.
I love it. And so a bunch of stuff you just talked about there, like with the seller financing, like a lot of people don't realize that if you never ask, you never gonna, ask. You're like, just, it never hurts to ask. And like, even for myself, like I buy properties and I sell properties. Mm-hmm. And even if you like, people like, like some of them I can do seller financing, some of them I can't. And some people are like, hey, you approached me and you said, hey, could I get one of your properties, Glenn, that's already been renovated and tenanted and basically ready to rock? Would you do seller financing? And a lot of times I'll be like, well, I can't on this one, but I have some other ones that I could do seller financing on. Exactly. Certain ones, depending on how the partnership is structured, I know that some will work and some won't. Mm-hmm. And another thing you touched on that was really good was you were talking about the how the market switched in Lubbock, Texas. And just thinking about that, if people are listening, you can think about the opposite right now, because like he was talking about a high inflationary period back in 2021, 2022, and where all of a sudden numbers weren't working and seller financing was drying up. And people right now don't realize that the actual opposite opportunity exists, that there is lots of seller financing right now, and there's a possibility to get prices. And a lot of people are sitting on the sidelines going, I'm going to wait until it's like flying up. And like, guess what? When that happens, all those really creative deals, the people letting you inherit a sub to, it's going to be harder. Right now is the opportunity to get into them. And so anyway, a lot of people got to think of both sides of this, because you're like, they always think, oh, I'm going to wait for the market to be shooting up, and then I want all the best parts of the market, but those parts are part of a different market. Correct. But you can still find seller financing in any market, but it's easier to find it in when the market is not on a full fly up. Correct. You're right. Very Frederick, this was an awesome chat. And honestly, I don't want to get into Michigan or New York today. I think we should have you back in like 6 months and we'll do another one. Continue this on.
Of course, by then there'll be more stories to tell, because like I said, I'm currently working on a few multifamilies in Texas now. I'm still focused, and of course, very important point to make to your viewers. Very, very important point to make to your viewers. And so ever since I started my real estate investing in Canada and the US, I've made some mistakes. I'm not going to dispute that. Well, I mean, if I sit down here and tell you I haven't made mistakes, I'm just lying. But you see, that shouldn't stop you from pulling the trigger. The same way I've made mistakes in some, I've made good choices and decisions in some other ones. You just need to educate yourself, have the knowledge, and then once you run your numbers and the numbers make sense to you and you have boots on the ground, if you're going to do long distance investing, then you just simply pull the trigger. One of the critical lessons that I've learned, especially investing here in Ontario, is that, and I've said to myself, the first thing I do when I'm going into any new market now, I need to find out if it's a landlord-friendly territory or a tenant-friendly territory. I've gotten my fingers burnt in some of the investments I've done here in Ontario, and that's because the laws favor the tenants. It's just simply because of that. That's all. Just because of that, right? So it's important that anybody who's trying to go into real estate investing, you do your homework, find out the laws that are favorable to which side of the aisle, and then make all your other research and then pull the trigger, right? I thought I should just mention that because that is very important, very important.
Oh, I know. I think a lot of people start off that way. That's how I started. I started off by investing in, the same city I lived in. And yeah, I was at the Ontario Landlord Tenant Board all the time.
All the time.
So yeah, I could have done better by even just picking a different province, but that's a big step as your first one, to be completely honest, right? But honestly, even if people are, they could join forces with somebody else who's already working in a different market in Alberta
Exactly.
or Saskatchewan or
Exactly.
the US, and yeah, and just get their feet wet and then continue on, right? Like I think
Correct.
then you just skip all that pain off the start.
Exactly.
Anyway, Frederick, this is a great combo. If people wanted to get a hold of you, where would they find you?
Okay, so first of all, I have a private equity company now called Econova Capital. Econova Capital. It's on www.econovacapital.com. You can reach me via that email website. You can also reach me on social media. I'm on Instagram, Frederick Obodozie, one word. But just so your viewers know, in Frederick, there's no D. That's my Instagram handle. There's no E in between D and R in Frederick. So it's first name, last name, but there's no E in between D and R. So you can reach me on social media, on Instagram, on YouTube, and on the website, like I said. And I'll be
How
happy
about
to
this?
chat with
Send
anyone.
me the list of those handles, and I'm
Okay.
gonna throw it in the show notes. And
Okay.
people like, I don't want to have to figure out this
Oh,
weird
yes, yes,
thing. That
exactly.
is like, I'll just go down to the show notes at the bottom, and it'll be there.
Okay, I'll send it to you. No worries. I'll send it to you.
Perfect. We'll make it easy for everybody.
Oh, yes. Yes, it will.
Anyway, Frederick, this was awesome. I appreciate your time. I appreciate all your sharing. This was great. Thank you.
Thank you. Thank you, Glenn. Thank you for having me.
That was a nice video. Bye.